Hello everyone, today we're going to have a look at the US Tech 100, that's the LCG CFD or spread bet for the Nasdaq 100. So we're leaning towards perhaps a more negative scenario for this index than perhaps would be implied by yesterday's price action. So you can see on this chart behind me, we had a big drop with a gap down lower on Monday, but we've had a rally back on Tuesday, and we're looking for a higher open again for the Nasdaq on Wednesday. Just a quick recap on what's going on here. Tech stocks sold off pretty severely on news that the FTC and the Justice Department in the US are likely going to probe the big tech companies, specifically Amazon, Facebook and Google, for anti-competitive behaviours. And given the fact the European Union has already charged these companies for similar things, it's probably fair to conclude that the US will find something similar. These are big monopolistic companies after all. We all know that, and that's why part of why they've been so successful. Alright, so this is bad news for these companies, understood. But why is the Nasdaq looking at risk? Well, because these companies are leading the Nasdaq. They have been the growth leaders for the last decade, and not only that, they've been the growth leaders for the entire US stock market. We're potentially at the end of the cycle in terms of the US economy, potentially at the end of a bull run in the US stock market, timing wise. So these kinds of things are extra sensitive. What else is going on? Well, we've got an escalation of the trade war, and global growth doesn't look so good. For example, today, the World Bank downgraded its global growth outlook. So if you pile this specific problem for the leaders of the market on top of a difficult macro backdrop, albeit the US is growing okay, European and UK are still growing, but at a pretty anemic pace, then it's a bit of a worry for the stock market. The major positive that we have for the stock market, and why this may just be a drop that rallies back to new highs, is that we've got the Fed supporting US stocks with talk of potential rate cut if needed to support the current rebounding, to support the current expansion, was the words of Jay Powell at the Federal Reserve. So the Fed may step in with lower rates. Okay, that's a good thing, but all these other factors we think probably outweigh it in the short term. So then how do we interpret this chart behind me? Potentially this is a head and shoulders pattern with a left shoulder, a head, a right shoulder, this being the neckline around 7250. What I've done here is I've just drawn the height from the head down to the neckline, and we've got a rough projection down to around 6,700. So we'll have to see how the market closes at the neckline, 7,200 and 7,300. These are all my key levels that I'm watching. If we get some closes for the day below these key levels, then we're looking at another sell-off and a fall back down to potentially 6,700. Alternative, if we do close back above those levels, then as we said, maybe the market's interpreting actions from the Fed as outweighing those macro headwinds and those specific problems for these US tech companies. All right, thanks for watching. Good luck with trading for the rest of the day. Jasper signing out.